I'm going to say something that might sound crazy, but hear me out. The current S&P 500 chart is actually signaling a bearish setup for traders right now. I know, the market's been on a tear lately, with the Dow rising on hopes of an Iran peace deal and the SpaceX IPO about to start trading. But here's the thing, when you look at the S&P 500 chart, you'll notice that it's been trading in a parallel trend line, and we've just broken and confirmed below that line. Now, I know some of you might be thinking, big deal, it's just a minor correction, but I believe this could be a significant sign of things to come. Here's why that matters. When a market breaks below a key trend line like this, it can be a signal that the momentum is shifting. And if you look at the numbers, you'll see that the VIX is currently at 1769, which is relatively high, indicating that volatility is on the rise. Oil prices are also down to $84.88, which could be a sign that the economy is slowing down. Now, I'm not saying that we're definitely headed for a downturn, but I do think that traders need to be cautious right now. The Fed's hawkish tone and the fact that they're not expecting to cut interest rates anytime soon could also be a factor in this bearish setup. But there's a catch. The market's been known to defy expectations, and we could easily see a bounce back up to the trend line. In fact, some of the news headlines I've been reading, like the one about Dan Ives' ETF being up 27% YTD, suggest that there's still a lot of optimism out there. So what's a trader to do? Well, I think it's essential to look at the data and make an informed decision. For example, let's say you're looking at a stock like Tesla. If you're bullish on the stock, you might want to consider buying a call option with a strike price of, say, $700. But if you're bearish, you might want to consider buying a put option with a strike price of $600. The key is to have a plan and stick to it, rather than getting caught up in the hype. Now consider this, the dollar's been suffering lately with its worst day since May 6th, and that could have implications for the market as a whole. If the dollar continues to decline, it could lead to higher import prices and lower demand for U.S. goods, which could be a bearish sign for the market. On the other hand, if the dollar starts to rise again, it could be a sign that the economy is strengthening, which could be bullish. So, it's essential to keep an eye on the dollar and how it's affecting the market. And that's exactly the problem. There are so many factors at play right now that it's hard to know what's going to happen next. Which brings us to the bull versus bear debate. Are we headed for a downturn, or is this just a minor correction? I think the bears have a strong argument, given the break below the trend line and the rising VIX. But the bulls could argue that the market's just consolidating before its next move up. For example, they might point to the fact that the SPY is still above its 50-day moving average, which could be a sign of strength. On the other hand, the bears might argue that the 10-year yield is at 4.49%, which is relatively high, and that could be a sign that the economy is slowing down. So, who's right? Well, I think the weight of evidence is currently on the side of the bears, but we'll have to wait and see how things play out. So, what does this mean for your money? I think it's essential to be cautious right now and to have a plan in place. If you're looking to trade, you might want to consider buying a put option or a call option, depending on your outlook. For example, if you're bearish on the S&P 500, you might want to consider buying a put option with a strike price of $720. On the other hand, if you're bullish, you might want to consider buying a call option with a strike price of $760. The key is to be disciplined and to stick to your plan, rather than getting caught up in the hype. And remember, this is just a hypothetical example. In real life, you'd want to do your own research and consider your own risk tolerance before making any trades. In conclusion, I believe that the current S&P 500 chart is signaling a bearish setup for traders right now. While there are certainly arguments on both sides, I think the weight of evidence is currently on the side of the bears. So what's next? Well, I think it's essential to keep a close eye on the market and to be prepared for anything. If you want to see how we're trading this setup, be sure to join us in our Discord, where we'll be sharing our live moves and analysis. And remember, this is all just for educational purposes. At the end of the day, it's up to you to do your own research and make your own decisions. Educational only, not financial advice.